This is the FCTO Daily Forex News Report for the 4th of July 2013. The euro dived to as low as 1.2922 against the US dollar overnight on political turmoil in Portugal. While some buying was seen late in the US session, helping the common currency recover, it's struggling to regain the 1.3 handle. Prime Minister Coelho refused to resign after the resignation of two ministers this week, including Foreign Minister Portas and Finance Minister Gaspar. The uncertainties sent 10-year Portuguese yield to as high as 8.18% yesterday and triggered some sell-off in other peripheral bonds. Combining the political uncertainties and higher yields, markets were concerned of Portugal's ability to regain full market access next year, which could then result in another bailout program. Eurozone head of finance minister Dijsselbloem also noted that the situation in Portugal is worrying, and he urged political leaders to take their responsibilities to solve the problems. European Commissioner President Barroso said that the initial reaction of the markets showed the obvious risk that the financial credibility recently built up by Portugal could be jeopardized by the current political instability. The European Central Bank rate announcement and press conference will be a major focus today. The ECB will likely leave the main refinancing rate unchanged at 0.5%. The central bank turned less dovish at the June meeting and upgraded the economic forecasts for 2014, suggesting policymakers probably have turned more optimistic over the growth outlook. European government bond yields climbed in tandem with the US after the Federal Open Market Committee meeting. This has somehow led to a tightening of financial conditions, but was partly offset by the euro's decline against the US dollar. The central bank will probably pledge to maintain accommodative measures, seeking to distinguish its monetary stance from the Fed's. The Bank of England will have the first meeting presided by new Governor Mark Carney and announce their rate decision today. It's widely expected that the central bank will keep rates unchanged at 0.5% and asset purchase target at 375 billion British pounds. The recent batch of solid economic data should have reduced the chance of expansion in the quantitative easing programme. Usually in such situations, the Bank of England will release a very brief statement, though we'd keep an eye on whether Carney will change the communication strategy, which might include forward guidance. Independence Day in America means the US market will be on holiday today. Any volatility triggered by the central bank meetings today might be short-lived, as traders' minds will remain on tomorrow's non-farm payroll. The 188,000 ADP figure released yesterday eased some concern of a disappointing non-farm payroll number. Also encouraging was that the employment component of ISM services posted strong gains to 54.7 in June, even though the headline composite index dropped to 52.2. However, it should be noted again that ISM manufacturing employment dropped into the contraction region of 48.7 in the same month. So while a solid non-farm payroll number is likely, it's not without risk. On the data front, Australia building approvals dropped more than expected by 1.1% month-on-month in May. The Eurozone will also release Q1 GDP final revision. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.